Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Well, thanks again for having me, Stephen. It's always nice. I think if people want to go back, and you do have these sessions archived, I believe, correct?
We do. So they can go and listen to this one or any of the other ones, fxoptions.com and /events. You can go back and listen to all of John's presentation and the other speakers. So I would highly recommend it. John, do you have time for a question or two?
Sure, go ahead.
Let's see. Oops, I am actually, can you actually help me out also? Oops, very good. My questions are sort of scrolling here right now.
All right.
See if you can find one.
Here's one from Michael K. John, you mentioned MA channels. I have heard of this from several speakers, but never anything definite as how to use them. That would be great in this or another presentation. What we talked about, Michael, was if you took a moving average based on highs, you can use whatever time parameter you want, a 7-period, a 5-period, a 10-period. What you're doing is just averaging out the moves of old highs. If the market generally, the theory is if a market closes above the highs, old highs, especially lots of highs, it either A, confirms there's still continued bullish momentum, or it's going to confirm a potential bearish reversal. So in other words, a new bullish move. Thanks for participating, Michael. And yes, they keep moving, so it's tough. Thank you, very informative. And John, thank you for your time today, for sharing expertise. You're welcome.
John,
Go ahead, Steve.
How do you go about, I always get from people that are talking about indicators, what's the best time to use? And I think you were mentioning that for some of the indicators you don't like to tweak it so much. Was that the MACD that you just like to use as is?
Yes, MACD and so say it again?
So which ones do you like to tweak and which ones don't you like to tweak?
Well, I like to tweak my own proprietary indicators, for one. That's how I developed them. Two, I do tweak moving averages. But moving averages, I don't use moving averages anymore based on closing values. I do use channels. I use open-close relationships. I look at proprietary exponential moving averages. And I take moving averages of different concepts. Some people will look at a moving average, and you could take, for example, a moving average of volatility. You could take moving average of ATR, average true ranges. So all I'm trying to do, folks, is identify a loss in momentum. I mean, if a market stops going down, it's generally going to reverse and go up. And there's, that's a part of trading. We see market movements all the time, and it just depends on your time horizon. In essence, I also like to look at seasonality, because it's very important to be on the right side of the market. Trading with seasonalities is like swimming upstream. If we're in a seasonally strong period of time, for example, for the euro currency, then the EIU is going to go down. If we're in a seasonally strong period for the U.S. dollar or weak period for the ISE's euro currency index, then guess what? It's going to go up. And I want to be looking at taking trades and look for buy signals in that environment. So I need to devise some type of criteria that helps me identify buy signals. So first, what's a buy signal? A buy signal is when a market gives you an idea that there's positive momentum, that the market may continue higher. If it fails, then tell me where to get out. And that's what I talked about earlier. Learn how to lose gracefully. If I think the market may not go anywhere, could stabilize for a while, at least not go down against me, and then come up with some type of a indicator that can help identify when it does break out, then I could kind of form a trading plan around it and put positions on in accordance to that market condition. Does that make sense? So if I'm bullish, then I may want to have aggressive long positions. If I'm neutral to bullish, I may want to have more conservative positions on, such as a low risk, low reward, high probability strategy like a credit put spread. So therefore, certain indicators will help me, and certain tools help me. And seasonality is number one. Pivots are number two, and defined set of variable moving averages are number three, Steve. Those are the things that I use most in my trading.
John, very, very insightful, as always. Getting a lot of positive comments. I can't wait to see you in person, whether it's at the Traders Expo or wherever else. I know that you travel very, very often, and I'm on the road. So, again, I love listening to you live and, of course, having you as a guest speaker here at the IAC. Looking forward to
now you're embarrassing me and filling my head full of ego thoughts. Steve, you're very gracious. You're a good man. We'd love to sit down with you as well. Thanks again. But when I leave here, I still have to go back to my real job and talk to my real wife. So all this is going to be deflated pretty soon, man.
Well, Scott, thanks again. I really appreciate it. On behalf of the ISC, we want to say thank you. And whether it's you talking about your indicators, seasonality, or just a plethora of other indicators that you use, it's always very, very informative. So thanks again.
Excellent. Thanks, Steve. Bye-bye. Everyone, thanks again.
Remember, you can, and I'm going to put up John's website. John, email it, johnp@nationalfutures.com. His website, nationalfutures.com. You can go and seek out his services there. Lots of free tools. We at the IAC love free tools because, again, you might want to pay for a service, but at least go and check out what he has for free. There's lots there, and you can come back, listen to the archive. John's done many presentations in the past. He'll come back in the future. Go and listen to the archives. In the future, actually the near future, we have Jack Brooks going to be joining us on Thursday talking about China's conflicting relationship with the U.S. dollar. And then I'll be talking about how interest rates affect the ICFX options. Dan Passarelli will be with us very shortly. So please sign up for all of those webinars and others. Want to, again, thank John Person. He did a phenomenal job. Thanks so much, John. Really appreciate it.
All right, Steve. Good night, everyone, and have a great trading week.
You too. On behalf of the ISC, I just want to thank everyone for attending, also John Person, and just want to wish you a great trading day tomorrow. Please, again, join us next Thursday, 2 days from now. We have Jack Brooks talking about the changing relationship between China and the U.S. I'm sure it'll be also very informative. Please sign up at www.fxoptions.com. On behalf of the ISC, Steve Meisinger, wishing you a great trading day tomorrow.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.